Hi guys, how's it going? Welcome back to Relatable. Now, in today's session, we're delving into a pretty critical topic for anyone navigating the intricacies of trading. We're going to be talking about Theta Decay. Now, this topic may seem a bit complex, but what we'll try to do is we look at it from some very relatable examples and of course include some actionable insights. Now, whether you're a trader or you're beginning in this trading journey of yours, there's something that we've tried to include for all of you all. So, without further ado, let's dive in. So, what is Theta Decay, right? Now let's try to understand this with a very relatable example. Imagine you're buying medicine, right? The one key piece of information you're probably most interested in understanding about the medicine is what is expiration date. Now, if it's closer to the expiration date, you're probably not going to buy it, right? So, in the same way, consider options like a medicine which is perishable in nature. Now, options are also born with a fixed expiry date. So, as the expiry date approaches, the option loses its value. But the important question here is by how much? Well, unlike other topics in finance, options can be a little heavy duty, right? But options price movement can be measured with the help of weeks, specifically theta. Now, theta helps us answer by how much the option will lose value every day as it approaches its expiry. Before we get into anything, let's define what theta decay is. So, in simple terms, it's the time decay of options premium as it approaches expiration. Theta is expressed as points lost per day when all other conditions remain constant. Now let's discuss how beginners can leverage theta decay in their trading strategies. Now, as I discussed, right, theta measures the rate of decline in the value of an option due to the passage of time. Now, for your assistance, we've created a checklist of all you ought to know and understand and to use theta decay in your trading. Let's take it one by one, right? So theta decay is known as the options time decay. Now, holding everything constant, the option loses value as the time moves closer to maturity, right? Like the medicine example. The decay indicated by theta is gradual initially, accelerating as the expiration approaches. Makes sense, right? It will lose value quicker as it's closer to the expiry date. Now, time moves in a single direction, making theta a positive number. Very important, right? Theta is very favorable, or I would say favorable, for option sellers. And shorting naked options at the start of a series allows you to pocket a large time value with a gradual fall in premium. Shorting an option close to expiry results in a low premium thanks to time value, but the fall in premium is rapid. The last 3 points are super crucial, right? And we'll illustrate this with an example. Now, in order to go in detail and in order to do it in a very practical way, I'm going to now include our instructor, Mr. Kapil, who is an expert in technical analysis as well as in options trading, who will take us through some extremely, valuable resources that you can use in order to understand very practically how theta decay will work, both from a very beginner standpoint as well as from a very advanced or from a seasoned trader's perspective. Why don't we now look at some very practical examples which are especially important to understand the last 3 points that we covered. So our instructor Kapil will help us out here.
Sure. So I think that the ideal way to understand this thing is to real time. We just try to compare the thing, okay, where and how the option theta varies. So let's say, for example, I have taken the 1st February 21,600 call option, which is right now, it has the theta value around 13 rupees. So it means 30 rupees for the this particular series, it erode by 30 rupees. But now by the same time, if I just increase my time duration, so let's say from 1st February, I shift to the 8th February, remaining all the things being equal, 21,600 call option, the rest of the things are equal. And here, if I add the positions, so here you will see that if for this particular 8th February, the theta decay is a 9.8, and whereas the theta decay for the 1st February, the same option expiry, that it is almost 30 rupees. So almost you see that there is 4 rupees difference is there. So it indicates that the When we have the shorter period for any expiration, your theta decay is high, and as the day passes, this 30 rupees will increase as well. So let's say today this 30 rupees, after 2 to 3 days, it will be a 14 or 15 anything. But on the next expiry, that is on the 8th February, you have the low figure over here, that is in 9.8. So it shows that the shorter delta has the high theta, and the higher time whenever we have, it has the low theta.
Okay. And just so we are understanding of what the significance of high theta versus low theta.
It is a very crucial point to when we are manufacturing sorts of strategy. So it indicates that at the time, with whatever the option premium it has, and at what pace it will get eroded. So it shows that for whatever the option premium that it has, let's say for example, it is having the option premium of around 100 rupees. So on that 100 rupee, on the next day it will get down by 13 rupees because of theta, whereas the 26th, the 8th February, it will be down by 8 rupees around.
Any other examples that you think we should go through to understand in terms of practical basic aspects when it comes to looking at options theta?
Because of the option theta is a very interesting thing, and many of the option strategies hovers around this kind of thing. How to find how to eat up the theta. So there are lots of strategies that has been built around. So let's say there are very famous short straddles, then there is calendar square strategies that has been built around. So it is all about how we are capturing that, because option theta is known as a seller's options friend. So once who is selling it, the theta is favorable to them. So basically, when option sellers, means right now we are seeing that in the market, the option selling is a very flavor of the recent context that we are seeing right now. So whenever we are selling, so it is nothing but we are trying to eating the theta. It is just in time decay that we are having.
Okay. So like you mentioned, calendar spread can be an interesting strategy to sort of implement utilizing our understanding of theta. Can you take us through how one can create a very I would not say a successful, but I would say a calendar spread strategy that gives us high chances of success, but also maintains and is a good hedge when if our reading of the market is not as per the actual market, the way the market evolves, for example.
As a theta decay, we can do the plain strategy. Means let's say, for example, I believe that the market is having some sorts of resistance at around practical terms 21,700 is the resistance for the market. So I can do a very simple thing with 21,700. I select my strike price. So this is here we go, and I just create a short position on this, and I add the position in this particular thing. So I am able to see that for this particular trade, I am occupying the 1,12,000 rupees as a margin. I have the undefined loss, so I can say that if the markets shoot up on the high side, I will be having the unlimited risk, and whereas on the profit side, I am having the profit of 7,000, which is in a 6% of it. Now, by blocking so much amount, I am able to gain a 6% within an unlimited risk. But here we can go within some sorts of strategies which hedges us. So what we have earlier discussed is that a theta decay is a faster for a near expiry, and it will be a slower for the next expiry. So let's say, for example, I have taken 8 February expiry over here. Now the same thing, if I look at and increase my expiry duration over here, so from 8th February, I shifted to the 15th February, and to hedge the thing, because earlier I have sold it to take the theta, now to hedge it, I have to buy, and I add the position over here. So now you can see the numbers will completely change. Earlier, if you can recall, I was getting my fund block by 1,11,000. Now it is just 22,000. It is just benefit that I have when I hedge the positions. Earlier, you have the profit potential of 6%. Now here you can see that you have the profit potential of 35,000 rupees. And when it comes to, and your risk is defined in this particular case, means whatever the case may be, whenever the market or wherever the market moves, your maximum risk is just around the 2,500 rupees. If you can see the risk to ratio, it is 1:3. You are risking the 2,500 rupees. On the reward to that, you are having the 8,000 rupees as a gain. So now but this 8,000 rupees profit potential is possible when the market is around the peak level. So let's say whatever the strike price that we have been sold, 21,700. So when we are around this strike price, we have the maximum profit, but your break-even point is also quite wide. So as far as you are within the range of 21,200 to 22,200 rupees. So in a 1,000-point range, if market ends up anywhere, we are still into the profit situation. So that is a advantage when we get into the model thinking, when we opt for the option strategy rather than looking for the naked option selling.
Very interesting. So this is in contrast to just taking a short sell when you are hedging with a buy position at a later expiry. Definitely leveraging theta, the results are drastically different from blocking over a lakh in margin. You are blocking only 22,000, and from gaining 6.5% in return, you are gaining almost 36% in return.
Right.
In your experience, Kapil, especially when looking at strategies like this, what are some inputs, right? You put a couple of inputs in the top bar over there. What are some inputs that you feel are, one should either educate or one should get them vetted before they get into strategies like this, for example?
Yes, Ronald. The thing is that we need to do some sorts of experiments over there. We have to play around this particular option strategies where we are having the risk-reward ratio proper, and we need to have the technical insight as well. It means why I am selecting the 21,700 as a strike price. Right. So technically, if you see that 21,700 is what the ratios over here. So first of all, deriving the technical view, and once we are clear about that, this is what the market structure is all about, these are what the important levels are over there, then we have to play around the strike price to get a maximum risk-reward ratio. And let's say I have did this particular thing. I have sold the 8th February, 15th February because my time horizon is quite wide. We can lower the time frame as well. So 1st February versus the 8th February. But one has to go through the option strategy to get a better risk-reward ratio rather than the naked option selling. Yes, it is very widely known that the theta is a options buyer's enemy and option seller's friend. So, and this is the options is altogether a different animal, and the game is all about how we eat up that premium that options offer. And with the considering the perspective of the delta and the theta, we have to manufacture some sorts of strategies and apply it with keeping the risk and reward.
This is great. We have understood theta in great detail, both from a very beginner standpoint, and you have also helped us understand how to look at theta and create a strategy, very interesting calendar spread strategy. You understood how the margin as well as the return varies when you do naked option selling versus when you are hedging a naked position with a buy position of a later expiry. Definitely leveraging Theta Decay, as well as understanding that some inputs should be vetted or you should be educated about those inputs, especially when it comes to taking option strategies like this. Any closing for your end if you would like to state?
Yeah, means we have to follow the process actually. So let's say how we are normally manufacture option strategies. So the very first thing, as we have said, understand the technical structure of the market, understand the key levels around these things. We need to keep under the perspective that how the market is all about. Means right now, let's say this is calendar spread. Calendar spread, whenever we are making any kind of strategy, we need to understand that how our view is. Is it a strong bullish we are, or is it the moderate bullish we are, or are we a kind of a neutral kind of a thing? So let's say we have created this calendar spread. This is not for the very volatile strategy, or when you expect that there is some sorts of directions are there. So let's say, for example, there is a very big event is there ahead of us. So one should not go for this particular strategy because it is a neutral kind of strategy that we are having. If the delta is higher than the theta, then this particular strategy will go on the toss. So we need to choose a stock, we need to choose a structure where we see that there is a little bit dullness or slowness in the price movement. Why we are talking about the calendar spread right now? Because in the current context of the market, we are seeing that market is stuck. It is in the range of 21,200 on the lower side, 21,800 on the higher side. So we are stuck in that range. So that's why we have chosen this particular strategy. If the scenario was completely different, then we might have gone for the other option strategy like a bull call spread or a long straddle, long struggle kind of the strategy that we have choose for. So whenever we opt for the strategy, it is very much required to understand the environment of the market, and based on that we need to deploy the strategy.
Correct. Very, very true. Very true. Not all strategies, regardless of how they may look on a backtesting model like this, should be deployed at all points. The timing context is what is shows in years of experience, for example.
So there you have it, guys. A very comprehensive guide on to Theta Decay. Now, whether you're starting out or you're a seasoned trader, understanding and strategically using Theta Decay can provide the edge in the market. Now, if you did find this video helpful, please don't forget to like, subscribe, and share with your friends. I hope it was beneficial for your trading career, if it started or if it's going to start in the future. I'll see you guys in the next video. Have a good day.